Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis, Friday, March 20th, 2015. Inside the numbers tonight, we're going to take a look at the SPY and the E-mini contract. We'll give you some thoughts on how next week is going to go. We'll give you some ideas in crude oil, gold, interest rates in the bond market, and then we'll talk about the dollar and we'll give it a wrap. Okay, so let's go over to the let's go over first to the 60-minute chart of the spider. Okay, and the reason I want to show you that is because last night we drew in the Fibonacci retracement lines, and I showed you that we came into about the 25% retracement. All right, and today we rocketed up. And the market wasn't able to take out this high, okay, from yesterday. All right, so that was from the 18th, pardon me, and that's relatively important. That was from Wednesday on the Fed announcement, and the reason why that's important is because I believe next week we're going to have somewhat of a little bit more backing and filling to go rather than just going straight up. Let's go over to the daily chart. Okay, let's get rid of this stuff. Okay, it's not out of the question for the market to continue to move kind of sideways to downward, somewhat to work off some of the severely short-term overbought condition from Wednesday. Okay. The market's going to consolidate for a little while, most likely, and then we're going to move higher. We're in a bullish phase of the year, and I've been telling you for a while that we're going to see higher prices in 2015. We're going to see higher highs. All right, we're going to break these highs, and we're going to keep going for a while. And there's probably, remember, first we have this 212.97. Okay, that's the target on the SPY, the first target once we breach these highs. Okay, and then I derive my next targets from the S&P E-mini contract, which is 20, and I think that coincides with the 212.97, which is 21.35, give or take. That's our next target on the upside of the E-mini contract. Further that, I think we're even going to go much higher over the course of the next few months. It's not going to be in a straight line. Nothing moves in a straight line. There's going to be corrections along the way, but corrections at this point in time are made to be bought, and that's what I was trying to convey in this area here, that whenever this selling pressure was finished, we were going to go higher, and that's exactly what happened. We just never hit the target that I intended to hit, which was down, and I think I have it on the SPY contract. Yeah, it was down at around the 203.50 area, which on the S&P E-mini just put it right down in this neighborhood here, 2025, 2030. Really, you know, we almost got there, but the number that we had was derived on the previous contract, so it was actually a little bit lower than this low here. But nevertheless, we didn't satisfy it, but yet again, when you don't satisfy a target on the downside, that usually intimates more bullish nature to the market, and it provides buoyancy, and that's really exactly what happened here, is the fact that we weren't able to reach the target on the downside was telling me and us that the market's really in a bullish position and wants to go higher, and that's exactly what's going on. So you can see here we're making higher highs. Here's a high, here's a high, here's a high, and then there's another one coming. Okay, let's see what else I have on the market tonight. Yeah, one last thing on the S&P. So the fact that we weren't able to close over 2100 tonight makes me believe that there's a little more downward pressure early in the week, and specifically because there's a high likelihood that we went as high as we did today, in part because it was options expiration, and if there were a lot of option contracts written above the market looking to expire, and they were then what happens is the institutions will take the market up in order to make those folks holding those contracts close them out rather than letting them expire worthless. So basically, they're not letting the investor have the money that wrote the contract or sold a contract or sold a call against the S&P. And that's what happens. If the market went down today, then most likely there would have been more put contracts sold on the downside, and that would have been the reason why the market went down. Nevertheless, it was quadruple witching, so you expect a little bit excessive behavior in one way or the other. So it's not out of the question for us to get a little backing and filling next week, but don't expect much. Those pullbacks are meant to be bought. Let's go over to the gold market, and this is very interesting because remember this trend line that I've been talking about for a few days? Well, we rocketed through it today. Now, I want to see another close above this trend line on Monday, and that'll put the market in a very bullish position with a 1217 target, first target, okay? There's higher prices, but let's take one target at a time. So, by the way, it's not out of the question, just like this big move here for 2 days, it's not out of the question for gold to have to work off some of this overbought, short-term overbought condition. Therefore, you can expect some backing and filling in gold, but again, we do expect higher prices coming. First target, as long as we stay above this trend line, is going to be 1217. Okay, let's go over to the oil complex. And what we have in oil is we have some bullish activity coming, or it's going on. And what you also have is you have the market maybe wants to challenge or get inside of this channel once again. Now, I did put out a trade alert to members today on the oil market, and I expect in the short term there's a high probability that we will see higher prices into the early part of next week in the oil market, in the crude oil market. So if that doesn't happen by, let's say, Tuesday, then the probabilities start to diminish. And, as long as we're above the 44 area in this contract, remember what I was saying, as long as we're above 44, this is in a bullish position. Below 44 is a bearish position. So we do have the probabilities in our favor for higher crude oil prices into early next week. And I just have an indication that we could see a spike higher into the $50 area into early next week. So we'll see how that plays out. But if it doesn't happen by Tuesday, the probabilities begin to diminish. Let's go over to the bond market. And we'll start with the TLT and higher prices yet. So the TLT was up again today about 72 cents, 0.5%. And I still think that this market is in a bullish position for the short term, for the time being. And when I say short term, it may be in terms of bullish nature, it still may be another month or so. But you will have backing and filling, and you will have some corrections along the way. But I think we're going to see even lower yields yet. So if I flip over to the yield chart, all right, same thing. Nothing goes in a straight line. But I do expect yields to get back down to this 1.8 area. And that's quite a ways away from where we are now. And if you flip back over to the TLT, that puts the TLT up in this 136 area. 135 to 136 neighborhood, and that's still a nice move from where we are, and it's certainly a nice move. It's a $12 move from where we bought the TLT down here. So higher prices yet coming in the bond market, something nobody thought was coming except those that bought the TLT down at 124.25. Let's talk about the dollar. And the dollar had a down day today, and that's one of the reasons crude oil was up. I'm waiting for the dollar to get down into this zone here. I'll start buying the dollar once it gets to this upper trend line of this channel, and then I will continue to buy the dollar in this channel, and then with three hands, I will buy the dollar at the lower end of this channel because I think this is the ultimate support area. I think we're going to have much higher prices in the dollar going in throughout 2015. I expect the dollar to breach 100 again, and I expect it to get up into the maybe 105, 108 area, if not this year, into early next year, but it's going to take a while to get there. So you want to own it for higher prices. So I think that about covers the gamut tonight. Hopefully this has been helpful. I hope everybody has a great weekend. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.